Hey, good morning. Just a second here. I got something to do. The system started a little bit slow this morning. I'm not sure if the internet's slow out there this morning. Possibly Google's system might be a little heavy at the moment. Sorry. This is Vance Williams out of Seattle, Washington. Welcome to my live Forex trading show this morning. What is it? It's Wednesday. Wow. Okay, before we get started, I want to show you something on the video player, and let me bring this up for you. If you were, clicking on the show, it would be this page right here, and you would click the video. And as it started to play, I'm going to pause it. Look right here. See this? Be part of the conversation. If you guys click on that, it's going to take you into more of an experience here. Of course, this is live. Keep in mind that the resolution's a little lower live in real time. You can sometimes change the settings here a little bit. But I want you to go here because you can applaud if there's a topic or something that you like. You can follow us on Twitter right here by clicking here. And then, of course, you can go to our website, forexartofwar.com, get free book downloads and follow the stories there. So I just want to show you guys how to just click on that and join it. Now, if you X that out immediately when you started the show, just refresh, restart the video right now, and then you can click and join this. So I'm going to be adding a lot more stuff here to, question and answers, and, so you guys can ask me questions live too. So it should be pretty cool. All right. So let me get this back, get that off the screen. Okay. By the way, if you follow me on Twitter, I don't do this show at a specific time each day. It's usually around US Open. If you follow me at Twitter, you'll get a tweet just a few minutes before the live show starts. If you and my goal here is to make sure to do my best to give you a vision of what the sentiment is of the global economy out there, what's going on, and to give you an idea about what price is likely to do. In addition, I like to share all the little techniques that we use with price trading logic. If you follow my shows over time, I will teach you all about how I do this with great accuracy. Okay, so let's see. Getting to it, I guess first of all, this morning in fundamentals this morning, we had the ADP non-farm employment data. That's the private numbers that were released at 8:15. It was all positive for the U.S. dollar. The number that came out was around 240,000 jobs. That's about 40,000 higher than the expectation. So, one of the things you want to do as we start to get a little more action in Forex trading again here is look at what the expectation is and then look at what the numbers were that were released. But be sure to keep in mind that they also do revisions of the previous month. So kind of at first, it could seem higher, and then once they do the revisions, it's lower. But playing on that information is, of course, there are a lot of risks involved and some issues with the trading platform, quite frankly, for most retail Forex traders. But anyway, I just want to shed a little insight there. Now, if we look at price, since one of the things I want to comment on, if we look at price since the ADP information was released, I'm going over to, this is the Euro 30-minute on the left. You can see that since the data was released, it's going up, and same thing with the pound. Why is that? Well, that's because sometimes when data is positive for the US dollar, just imagine, there's the issues going on in Hong Kong, there's the wars, the recent activity the US and other countries are engaged in Syria. These types of things cause a little bit of discomfort for investors, and so they'll pull money out of higher risk investments and move it into the dollar and other more conservative instruments, and that causes the US dollar to go up, the pound and the euro to go down. And so if you just if you keep track of that story, if there's a lot of positive information out for the US dollar, then you might expect the euro and the pound charts to be dropping, but yes, they go the other way. The reason why is because a portion of the investors and traders are pulling, since they're feeling good about the US economy, they're pulling money out of the Forex, which is kind of like just a big bank account, if you think about it, and they're putting it into other instruments. And so that's why we've seen this little lift here. Let's see, what else? Keep in mind that the market, these big moves that we've seen down, is in large part based upon central bank policy. They wanted the euro to go down. The question is how far. But don't lose sight of the fact that this is not about how. Hold on just a second. I think I have to sneeze. Nope. Well, this is live. Anyway, what I was saying is don't lose sight of the fact that this is not about how strong or weak the euro is. This is about how far the central banks want the euro to go down. Sure, they've followed through with quantitative easing, but they could talk very quickly or change their talk very quickly when they reach the price level that they want. For example, they could begin, kind of backing off of their talk about raising U.S. dollar interest rates in 2015. This, of course, would send the euro screaming straight up the chart. So just keep that in mind. This is really about central bank policy. But this morning, if we're talking about the overall story of what's going on in the world and the markets and all of that, the overall story, nothing has changed. So for the foreseeable future, the euro dollar is bearish. I would say that, there is a full correction that needs to happen at some point. For example, if this is the bottom, and let's go to the euro, let's just pop over to a euro daily chart. What I see is there's movement here, then movement here, and it really kind of takes off here. So there's the potential of a full correction right up around 2,900 to 13,000. Now, if it drops lower, then of course that correction will be at a lower price. We're looking at euro tend to correct around 50%. So we're not sure. Nobody really knows when that's going to happen. But when it does start to happen, you can look for a pretty strong correction up. And then that might be followed by more investors pushing it to the downside again. Just kind of have to look to see what the central bank language is, what they're talking about at that time. Okay, let's see what else. Did want to show you what unfolded yesterday. When we were on the show yesterday, we had a move right here. I'm going to drop down to a 5-minute just so you can see the behavior a little better. I'll show you what we were looking at. When I did the show, price was right around here. And so a number of our traders took positions a little bit higher because it was an unusual move. I mean, for a new wave to move 86 pips without a 38.2 retracement is unusual. I mean, it just doesn't happen very often. That's the definition of unusual. And so what that does is when there's something unusual happen, that tends to increase the risk. So most of our traders actually waited for a higher entry instead of going in around 38.2. They waited for 50%, 61.8. When we were in our live trading room, we took the position at 26.14, right at 50%, put the stop here at about 26.42. And then that position, let's go out to 30-minute. That position hit the target this morning. So that just gives you an example. If you follow one show to the next, you can see what we're looking for. Strong move, pull back, manage the risk, get in and get out. So I wanted to show you that. Okay, now let's get rid of these prices and talk about what's going on right now. So fundamentally, we're bearish on the euro dollar and the pound dollar right now, but with the potential for a correction. Full correction. So what we would do is we would look for clues of, is it likely to correct higher? What can we look at that would give us an idea about that? Well, probably one of the best tools that we could use is a supply line here. And it looks like we've got a level that's defined by right about there. And let me change that color. What color do I want? I'm going to go with just something bright. So yeah, so there's our supply line. Now these are defined. Now somebody would say, well, Vance, there's another one right here. Yeah, there is, but I've done this long enough. I can tell you this is the relevant one. So what we've got is if a 30-minute candle can close above this, it's very likely that we're going to get a push up in this area. Now we are going to run into some sell orders. I got a lot of stuff on here. Let me get rid of some of that. Right here. This area right here, there's going to be a lot of interest in selling right in this area. Oops, didn't get an arrow there. arrow down, right in this area right here. And I guess a price would be helpful there. So right in that area, 126.69. It's just an obvious place of resistance here where, you know, there's going to be just some sell orders sitting there. So if this does correct up and you get a trend change up, and let's see how big this area is. It's about 35 pips. If the moving averages cross over and you've got room to get in and out of that trade before it hits there, then it's probably good. But you'll probably see it struggle there because of all the selling interest. What would be more interesting this morning is to see price actually advance below this level right here. This is about a 50 pip range that we're in from here to here. And so you can see that price did push a little lower here, so we can't even get a demand line on here. But I would look for price to make a move below 25.78. It's probably going to offer more of a potential trade than one here, but you just have to watch and see. Moving over to the pound, again, let's go ahead and put a supply line on there. This is using TD points, something we teach our level 3 members. It's just a technique to help you see things. So you can see that this would have been created. Let me show you exactly the points that create this. Be this point and this point, arrow down, this point right here. So it's these 2 points that create this supply line. And you can see that that was honored right there. It pulled back and now it's pushing above it. So what this would say to us in about 5 minutes, if this candle closes above this with, you know, not a super long wick on it, it's going to suggest that this morning is probably going to continue to move up at least some, and probably move up into this area of buyer-seller conflict. You can see this range right here. And so for a buy, we would really look for the moving averages to turn over and close to the top side. The moving averages, you know, aren't exactly accurate in terms of measuring the money, but they help a lot. And but they are 100% accurate when it comes to how we use them. We only use them when the trend is advancing. And in that context, they're 100% accurate. As far as the bottom, I just got a couple things to point out to you. Right here is probably the key price level. I could put a rectangle on there, just kind of emphasize that. And then I think it's really important that you recognize this. How come my circle won't draw right? There we go. This area right here, you see this long tail? There are a lot of buy orders sitting in this area. So it's likely to, you know, bounce around quite a bit in here. Okay, so just keep that in mind. It's just one of those things. We'd have a lot of great setups, and we're just kind of into an area. Look at all these. This tells you. I'll tell you why this tells you that. When you see a 30-minute candle closed up back in here into the barrier like this with a long tail, that's a pin bar, by the way. It tells you that there were more buyers, a lot more buyers in this area during that period than there were sellers. So there's other orders sitting all through here for buys. So so do keep that in mind. But the main thing is you need a good setup. And I would look for a move below 61.77 coming through here, but with potentially a setup that meets your trading plan. Bottom line is you've got to follow your personal setup and, you know, something that fits your trading plan. Let's see, anything else? I just wanted to remind you guys, on the right side, if you're you'll see a link to Forex Art of War, and I just want to remind you guys, you know, that my goal is to provide information. Our goal, Victor post analysis prior to London Open. He's awake there in Australia while I'm sleeping. High impact data, I tend to recap fundamentals the night before the data is going to come out. And then just kind of, and then there's also some training here as well. Master of the Fibonacci tool. This is one of the most valuable training videos that you could possibly watch when it comes to Forex trading, because it's going to teach you how to see those new waves. And what a new wave is when a buyer or a seller is actually advancing the trend. They're actually taking new ground, so to speak. And it's going to show you how strong that advantage is, so you know that this is a high probability trade or not. So that very, very valuable tool. It's right there for free for you. In fact, pretty much all the education we give away for free, because what we do is we train and coach. That's what we do. Education, I could give you 1,000 hours of education, and it wouldn't take me more than 5 minutes of my time. But coaching and training, that requires focus, watching what you do, and that sort of thing. So that's about it this morning. Heads up, our prices and packaging will be changing in the next few weeks. We haven't offered training for a couple of months now. We will be making an offer in the next 7 to 10 days. It'll be very affordable before we finally put away that old pricing and release the new packages. So if you want to learn more about that, just contact me. I'm easy to find. Vance at forexartofwar.com. There's just all kinds of ways to find me. I hope you got at least one idea that helped you this morning. And to our members, I'll see you guys in our live trading room in about 30 minutes. Cheers, everyone.